Good morning. So, I've been away for a minute. I'm back. I had to take care of some business. Had to see about my mom, so I had to do a little bit of traveling, and I'm back. So, as many of you know, my busy season is quickly approaching. Tax time is going to be crazy this year. So, I wanted to make sure that I did get an opportunity to pop back in, have a little chit chat with you all about two main things that I think are important for you to remember. I've been seeing a lot on social media about these particular topics, and what's crazy is I'm seeing a lot of people discussing it that that's not even in our profession. This ain't what they do, so I kind of want them to move on out the lane, because I feel like y'all be getting a little bit of misguided and misled information sometimes. So I be the one to come here and correct it, because I want y'all to understand from a whole nother perspective why some of this stuff don't make sense. So the first thing that does make sense, and that we don't have a choice in, is if you are a business owner and you own a business that you organize with your local Secretary of State's office, you are required to file the beneficial ownership information documentation no later than December 31st of 2024. So you have a couple of weeks to do that, okay? Penalties are crazy, up to $500 a day, maximum of $10,000, and up to, 2 or 3 years imprisonment, because they're basically trying to crack down on money laundering and all that stuff, and people setting up shell corporations and moving and shifting and shaking money. So that's what that's about. If you ain't doing that, don't worry about it. And we're going to move on to the next thing. Oh, before we move on to the next thing, though, it's free. You can fill out this. You can do it online, electronically. It is free. You can do it in about 10 minutes or less. There's no cost for it. You will get a confirmation number immediately. And we're not sure, those of us in the profession, we aren't sure at this time whether or not this is going to be a continuing requirement as far as this annual filing. We haven't gotten any specific guidance on that yet. It's kind of still up in the air as far as I know. So we're going to see. But as soon as we know more, I definitely will share that with you. The second thing I want to talk about is the subject of capital gains. So all of these people who are on social media who are not practitioners in the area of finance and accounting have a lot to say about capital gains. But I'm going to give you this piece of information because it's the most important thing that has to do with capital gains, okay? Whether it's a capital gain or whether it's a capital loss. So when you're dealing with capital assets, the sale of or exchange of capital assets, here's the secret. Come closer. Come closer. There is no capital gain if you don't sell, right? So a capital gain or loss is a triggered event. That capital triggering event is if you sell, barter, exchange, or whatever, a capital asset. And if you sell it for higher than when you purchased it or inherited the asset, it's a capital gain. If you sell it, barter it, or exchange it for less than, it's a capital loss, okay? But for some of us who have grandparents and great-grandparents and parents who have left us that nice piece of land and property in the country, if you don't sell, you don't have to worry about paying a capital gain or incurring a capital loss, okay? So all of this business about, oh, don't let your mama put your house in your name. Child, please. My mama been done that. Because guess what? I ain't selling nothing. Why would I sell acreage of land that my great-grandparents worked and slaved to own and hand down to their kids, who handed it down to their kids, who handed it down to us? Why would I ever sell that? That is one of the most valuable things I have. Because one thing ain't nobody doing out here is making more land, right? So be wise when it comes to who you're listening to and whose advice you're taking when it comes to capital gains, capital losses. So you and your family do what you do, but just know, as long as you don't intend to sell it, you can do a lot of things that can create you residual income with your inheritance that doesn't have anything to do with you selling it or losing it, okay? So be mindful of that and stop listening to these shade tree accountants and shade tree financial consultants who talk about capital gains and losses and all that kind of stuff. Because if you have it, I encourage you to try to keep it. Now that's my little $5.99 for the day. And I hope you think about those things that I've talked about and make sure that you understand the differences. And if you don't, feel free. Hit your girl up at www.tsjfinancial.com. You can book a free consultation with me, and I can tell you all about it on a one-to-one individual basis, because everybody's situation is different. Worry about yours and let the motherfucker over there worry about theirs, okay? Have a good day.